This is Elliot White Sage. I want to go ahead and do end of the day market update. Like always, none of this is financial advice. Always do what's best for you. Market reacted exactly how I expected it to. If you had got my trade alert a few days ago, we reversed exactly off of that level today, so you could have booked some profit or all if you wanted to. Now we're kind of in a situation where the market can bounce, or it could have a cascade, sell-off cascade in a capitulation type 3 of 3 move. So one idea is it can still extend higher up to the 404 area in this area. This could still do it, and then we would call this 1, 2, 3, 4, 5. Okay. If it were to end already and just go down, then I would actually go back to my count of a 1, 2, 1, 2. So that's how I would look at it. Something like that. Now, if we look at the 4-hour, we want to try to see where we are in the cycle. If you really look at this 4-hour cycle here, right, we didn't really break out, and we are breaking down, but if you really look from the top, we haven't really corrected it. So that's why I don't like this count. Now, if we push up higher into this area, then obviously this would be the count. If we don't, then we're only back to kind of a couple options, either this 1, 2, 1, 2, or perhaps, and this is something I was thinking about, 3, 4, 5, and then a move higher, and then we drop mid-April. So how will we know? Well, we'll know because if this is if it's a 1, 2, 1, 2, or if it's a 1, 2, 1, 2, we should sell off with a large volatility spike. If we don't and just get a small drop, and volatility is like down, a divergent indicator, and of course we maintain some bullish divergence, then I would actually look for this counter trend rally like that. I would look for that. So just keep that in mind. Market could be really tricky here. So we don't know. So you just kind of take the setups as they come. So we had that setup here, and boom. Now what's the next setup? Well, the next setup is either 404, 5, 404 for another short, or we go down. And if we go down, we're looking for a massive drop with volatility spike. When you don't get that, then it could be a big trap that I showed you, and you would look for this counter trend rally. And if you're an aggressive trader, you could try to play that counter trend bounce, because it would be a substantial bounce from where we would be. And this is the downtrend line. So where does that get us? 376, 370, 374. And if you remember, again, if those who saw my other videos, I said that if the dollar had moved higher, which it did, right? We know it moved higher. It did this move here, right? It moved here. And I said once that happened, we would be looking at SPY 374. And that could be where we do end up after all is said and done. And then we get a much more substantial relief rally. However, that relief rally will fail in an epic decline. So those are two things to keep in mind if you're trading this market, I do not think we'll just kind of slowly come down, and then I think we're gonna have a big move. So my guess is if it's a 3 of 3, we want to see that divergence erased on the 4-hour, and we want to see that the VIX spike. The stochastic on the 4-hour is cross bearish. It should be turning down. So it seems that this is the count that we're looking at right now. It seems not likely to get to 404 unless the stochastic turns back up, like we've seen a couple times, like we did here. You see that? So it's possible. It's possible, but we need to wait and see. We need to wait and see. So that's the SPY. The Dow, like I said, I'm not really counting it because there's too many possibilities. This is the more bearish count, a 1, 2, and then we just, again, if you look here, 1, 2, 3, 4, 5 for another 1. 2 could be done here, or it may take another bounce up, you know, to 32.6. It could even be 1, 2, 3, 4, 5, right? And we talked about that with the SPY. 3, 4, 5, and then, you know, we rip higher in a counter trend rally to correct this entire cycle. So again, a bounce, probably coming back up to 33.2. So let's look at the 4-hour. Again, we need to erase that divergence. Can we do it? So if you're bearish, you gotta be careful of this bear trap. If the bears overplay their hands and the market decides to do this, this is the area where 5 can end. You know, keep that in mind. If it does that, the trap. Again, it may. Again, I want to stress, this is just one alternative. The other alternative is what I showed you. We're about to have a massive decline. And I think it's really up to the Federal Reserve in some ways on how they want to play this out. And again, 2 could still go higher. So we got to keep an eye on that. The triple Qs is again very, very, you know, bullish here. If we make another high, we'll have an impulse off the bottom. So then it can become a flat, right? I can make this a flat like that here, and then I could put 1 there, and then A, B, C, and then that will get us to 311. As long as we respect 313 here, 7.8, then we call this a flat. If we can make, if it can make another high. If it doesn't, then it's done. Here, this was our sell area. Despite all the bullishness, it failed in this area, and it really struggled. It definitely struggled. So we need to wait and see what count we need to go with in the NASDAQ. Now, if we look at stocks like NVIDIA, it looks like it's still not done, this sequence. So tech, like I said, there's even this alternative count where B ends up here, you know. So this tech will end when the 10-year and the 30-year bottom in 4. That's my thinking. Could have already happened here, although it still could push lower and surprise us. So we don't know. We don't know. So, and then the 30-year looks like it needs more downside. Well, you know, a little more downside. So you look at the 10 and 30-year, looks like it needs a little more downside. And the dollar looks like it wants to do this correction and come down to 102.7. So what that tells me is gold could still go higher, crypto could still go a little bit higher, but I believe when this finishes here, we're going to get that sell-off where gold finishes its 5 waves, crypto declines, some bottoms are held, tech declines, and it's generally risk off. But like I said, not guaranteed because we're respecting that low. We could still be like that, ready to take off. So it's a very dangerous market, guys. This is a very dangerous market for both sides, but definitely on the long side right now. IWM just getting destroyed, right? IWM is the Russell. And again, we could be in ready for a massive drop and a 1-2, 1-2, 1-2, maybe a little bit higher. The other alternative is this is still 2 in an A, B, C. We backtest that trend line and get rejected. I'll definitely be a short. I will short that if I can get that trade. That's the next, my next watch out. This would be a nice setup to get an entry on a short on the Russell if it gives it to you. But if you really look at this, this is like a flagpole, and this is some kind of flag in pattern development or descendant triangle. So this is very bearish. So it doesn't look like that's going to happen, and we're just going to break down. So and coincidentally, it ends at the Fed meeting. So don't know. We'll see how this goes, but not looking good. As you know, bank stocks today broke down. They broke down even further, and on tonight we're hearing about more bank failures, potential bank failures in the hundreds. The guys define what do the charts say? We have this idea that I've brought up called the go to zero chart. When the technicals break and the pivot breaks, there's no more room to the downside, so we call that the go to zero chart. You know, Credit Suisse had that. We saw it in Caravana. We saw it in Silvergate. If you've been following me, I predicted all those massive breakdowns well before the news came out. So we have to look at these charts, and then when those pivots break, they break, and I call them the go to zero moment. You know, Charles Schwab doesn't really have that. It has a 5 that's got to play out, I think. Now, if this reaction is too strong, then it's correcting in some kind of WXY, and you can see it's not. So looking for this 4 to be done, playing this 5. When this 5 is done, for people that have the kahunas, or can want to take an aggressive trade, this is the area to do it. 37, 36, but I would stop out at 33, because again, if it breaks 27, then we could be heading to a go to zero moment. But it seems like if there's anyone out there that may survive, this could be one. This could be one. So just throw that out there for the aggressive trader. And of course, we'll want to see some bullish divergence play out. FRC, again, I warned you about FRC. Even though we bounced here in my video, I said wasn't a sequence, wasn't finished. We only have 1, 2, 3. Now we have 4. Now we're in 5. So that would finish this leg down. But then look, you have a 1, 2. So it's going to finish a leg down and bounce hard, and people are going to think it's over, but it's still not over if it can even survive. So, I mean, if you look at where we're going here, $9.18, $9. So we're going to 9, possibly $2. If it can even survive that, it will bounce hard for a while, a couple months, maybe more, but then it will fail again. And chances are when that happens, it won't be around. So that's why I said stay away from it. Credit Suisse, I talked about staying away. So what's another one? I'm hearing Wells Fargo's weak. So what's Wells Fargo looking like? What do I need to do? Well, we haven't broke the low yet, but I think it's inevitable we're going to. If you look, you have 5 waves down here, 3 waves up, and now we need an impulse. So if we look, we're really only in wave 1. You see, here's 2 and 4. We don't even have wave 2 yet of this decline. So this is obviously going to break down, and it looks like Wells Fargo's heading to $15. $15, and I would avoid it, or it could be a short play on bounces on any strength. So here's 14. Now, one of the things you look at also is where we are. Where's 14 here? Is, it's right at this support. If we break 8, then this bank's in trouble. So this will be stressed, but it looks like it should make it, but stressed. So I'm just going through it, guys. So it's very sad, but it is, the charts are what they are. The people are selling, and here again, XLF, the sector needs to go down. We're not there yet. So until this is done, then I don't think the corrective cycle really is over. Where would the indices be when we're down here? We don't know yet, but we need to wait and see. So that's the market in a nutshell. I'll just kind of click through it. Bitcoin, of course, rallied. Everyone's like, oh, see, Bitcoin, you're right. Crypto is the safe haven. See, but you guys, tech's been rallying. The dollar's been falling, and the bond yields have been falling. So it's too early to get excited. Show me this when the dollar is rallying and tech is falling. If this can happen, then Bitcoin is where you want to be. But right now, I would be careful. I'd be really careful. And like I said, 30,000 seems to be where we're headed. Somewhere in this area, I'm thinking. And then there'll be a moment of truth. But I do believe that it will pull back. Did it create enough space to hold that low? The higher it goes, it can do that. So I think that's something to think about. And if the dollar can drop, Bitcoin could continue to 30. And then when the dollar swings up again, we'll see where Bitcoin trades. But I imagine the way I think this will play out is the dollar drops, the bond rates fall, crypto rises and gold rises and silver rises, because we're thinking the Fed's going to pivot. Everything's good. Inflation's going to be the name of the game. The Fed's going to just pump this thing again. And then they come out, or post-Fed meeting, the hangover, and realize, damn, they're kidding. They're raising rates. They raised 25, or God forbid they raise 50 in the meeting. And then all hell breaks loose, and the dollar spikes, gold crashes, and in the same trade we've been in, tech crashes, and then maybe oil gets a bid, energy gets a bid. It's the same kind of mechanism. So that could happen. Be careful of that, because wouldn't it be a great opportunity to show how serious they are about inflation, to defy all the pundits and predictor prophets out there, and raise 50 basis points? And I mean, that would shake people up and show that, hey, Powell is serious, he's tough, he meant what he said. And hell, he could say, I even expected these failures. They didn't surprise me, and I had a plan. We had a plan for that. And he can spin it that way, because if he gives in at all, it looks like he didn't know what he was doing. He just went before Congress and misspoke, and it shows he's clueless. So from human nature standpoint, I expect a hawkish Fed meeting, and the charts seem to be setting up for that moment for him to do that, with gold at 5, with Bitcoin near its top and everything topped. It just seems like it's set up for him to do the unexpected and be a hawk, and then you'll have people yelling again, the Fed knows nothing, and they'll be hating him, and Kramer will finally hate him for once, and then the market will do that waterfall sell-off, and then Powell may go, and as the banks get further pressured, he may say, yeah, maybe never mind. And then we get a massive inflationary run where he really can't ignore it. Or he just follows through, and we have a 1929 style deflationary crash with all the mess and aftermath that goes with that. And he wins. He got his inflation down, but then he left a huge mess. But again, what's the lesser of two evils? What is Powell going to do? Ball's in his court to decide. The market is set up either way, but it seems like it's anticipating him to be more hawkish than we expect. Now, he could come out very dovish or no hike, and again, that may be good at first, but then again, you'll get gold and silver, all that will run, of course, but again, that would just we'll get like more of a stagflation trade on that, and we'll see how that plays out. And I also think some things in tech are running hot, not just because of the yields and the weak dollar. I also think there's some firms that can pass on the commoditized increases that they'll see because of inflation, because their services are so essential. Like, I mean, Adobe had good earnings. They passed on cost increases like it was nothing. And maybe the market's thinking there's certain tech companies that are so ingrained and valuable. They're essentially like, oil, corn, meat, to society. So we'll pay whatever price because we have to pay it to just live as a society. And could Adobe be one of those? And could there be enough of those in this indice to keep this going in an inflationary environment? There could be a few of those kinds of companies in there. We need to find which ones those are. And maybe if Powell decides to do the inflationary path, how, of course, gold and silver will run. And then eventually, I believe all the commodities will go parabolic. And then he'll be in a lot of problems. And of course, a lot of other things won't do that. And I think oil will eventually go parabolic if he does pivot just from the commodity side. So I think he's forced to raise rates and continue the rate hiking cycle despite what people want him to do. Because you better be careful what you wish for if you do get no rate increase. So then that's all I think I want to say on the market. And then I'll just click through some of these. So commodity stocks. See if there's anything interested in here. Starting to see a rebound a little bit in some of these stocks. NRGU, triple leveraged. Looks like it needs to get to 138. So it looks like it's got some more downside. So looks like the oil sector's not out of the woods. OIH should be bouncing soon. And X here, 3, maybe not yet, but we should get a bounce and a failure. And let's go to the metals. GDXD destroyed. Says that short gold idea, but what's interesting about the GDXD, it did respect its low at 531 in a flat. So again, gold is 5 up. Gold is 5 up, and it could be tricky with the Fed meeting, and that may be a good reason for gold GLD to pull back. Because now that you have this 5 up sequence here, actually, let's go to the metal itself. Gold, now that you have this 5 up sequence, you're about to race with divergence on the daily. Let's look at the 4-hour. Still have divergence. Now, if the 4-hour races divergence, then things change. And again, it could change for the worse for the bears. I mean, better for the bears, because then you have to look at this in a couple ways. Right now, I'm looking at it as a 1, 2, 3, 4, 5, where 1 is. Now, of course, some people could go, well, that's a 1, 2, 1, 2, and going parabolic. But the other option is if this is no divergence, it's a massive 3-wave connector truncated. And if that's a 3-wave reaction, then this is just a 1, 2. And then we'd have, so you really want to see some divergence and pull back. Because if we erase divergence, it does risk a corrective structure until you break the all-time high. But I do believe we'll do this pullback when the dollar goes higher, but this will be a viable dip. viable dip. However, again, we erase divergence, and then there's other alternatives, and then there is probably a bearish alternative with divergence is erased, possibly that I could think of, but it would need to stay below 2080, and then this could be 1, 2, and then down. So we have to wait and see. So if it erases divergence, it needs to make a new all-time high. Makes a new all-time high, then there is no bearish case that I can think of. It's just bullish. And then it could continue. And this 4 may turn into another 1, 2. It could do a lot of things. So we don't know. If it is a wave 5, it should end around 2300 to top off in wave 1. And then we have a really massive decline, probably all the way back down to 1500. And this would be just a 1, 2, 3, 4, 5 up. So either way, I know people I'm seeing, oh, 5,000, 6,000. It's not set. It doesn't seem set up for that. But you know, if it is a 1, 2, 1, 2, then perhaps we can do that if we can erase the monthly divergence. So it's still got a ways to go. All right. Technology real quick, if there's anything. So everyone's wondering about AMD and NVIDIA. When are they going to top? 1, 2, 1, 2, 3, 4, 5, 3, 4. We're in wave 5. So AMD is in its last moments. Perhaps it can tag 100. NVIDIA. Let's take a look. W, X, Y, 1, 2, 1, 2, 3, 4. So NVIDIA is going to go higher. It's just going to go higher. The count does not look like it's finished. So that's why tech could still surprise people here. But it is close. 3, 4, 5, 3, 4, 5. Reaching for the sun here. And it will have a massive drop when this finishes at some point. All right. Anyway, I don't have anything else. So I'll just end the video here, guys. And I'll do a more detailed crypto update tomorrow. Subscribe to my channel so I can go back to live streams. I know you guys like your Q&A, so talk to people. Get them to subscribe, get me back up to 1,000 subscribers, and we can live stream again. Until then, you can listen. And like I said, I think a good setup could be short IWM on a bounce if it comes. I like that. I do not like shorting really bullish instruments like gold or NVIDIA or AMD. As you can see, it can keep extending. You like to short things that are weak. So like to short like to short this IWM on a bounce. Triple Qs, you already have an entry. It could even go higher, so be careful on that. But this was an entry. The SPY also could have another entry. Now the other move, again, just to keep in mind, could be this 1, 2, 3, 4, 5, and then we bounce back up and then crash. And the triple Qs, that scenario would be, you know, kind of like a pullback here, and then we come back up. So it'd be something like, here we have a 1, 2, 3, 4. So this would be like a 1, 2, 3, 4, 5, and then come down. So just watch for that. Those tricky market makers, you know, what they try to do. So we'll know based on, I think, the VIX. If we get that decline and the VIX is red or doesn't spike in, then I think it's a trap. If the VIX spikes, then it's probably wave 3 of 3, and more than likely we'll be coming out into this area. All right, guys, that's my video. Talk to you later.